Welcome to Delphos Insights. Today, we are analyzing the profound evolution of emerging markets investing. The traditional perception was one of a volatile, unpredictable space, the Wild West of global finance. That perception is outdated.
Indeed, we have transitioned into an era defined by discipline and data. The objective is no longer chasing high yield, but sophisticated mastery of risk to deliver compelling, risk-adjusted returns. In this landscape, passive strategies prove insufficient.
The growth differential remains compelling. Projections show emerging markets growing over 4% annually, compared to 1.5% for developed economies. However, the central question has always been managing inherent volatility.
Precisely where strategy has matured. The conversation has shifted from risk avoidance to risk pricing and structuring. This centers on understanding risk premia, the additional return required to compensate for political, currency, and regulatory uncertainties.
The 2025 data illustrates this perfectly. EM equities rebounded nearly twice as strongly as developed market stocks, highlighting both upside potential and the need for active management.
Correct. Sophisticated investors now employ granular risk mitigation strategies. For political risk, they monitor institutional credibility and policy predictability to guide capital allocation. We have observed political risk premia compress in markets like Mexico and India due to stronger governance.
Currency risk management has also evolved. While a weakening US dollar in 2025 eased some pressure, this remains a primary concern.
Tactical hedging using FX forwards and options is standard practice. Strategically, the focus involves optimizing exposure by balancing portfolios with local currency and hard currency debt. The goal is resilience, not complete risk elimination.
Beyond traditional risks, climate change has become a critical variable in risk equations.
Climate resilience assessment is non-negotiable in modern due diligence. Investors assess climate factors as rigorously as financial returns. This also illuminates new opportunities in renewable energy projects and critical minerals essential for global energy transition.
This brings us to blended finance, a key de-risking mechanism. Could you explain these mechanics?
Blended finance represents one of the most effective mechanisms for mobilizing capital in high-impact sectors. The structure combines private commercial capital with concessional funding from development finance institutions. DFI capital can absorb initial losses, providing crucial credit enhancement that improves risk-return profiles to levels acceptable for institutional capital.
Delphos has structured several such transactions.
Indeed, we advised Pearl Dairy in East Africa on a $35 million facility from IFC and FMO to strengthen dairy value chains. We also structured financing for a 66-megawatt solar plant in Guatemala. Blended finance made these high-impact projects bankable.
What constitutes the essential investor playbook for 2025?
4 key pillars define best practices. First, strategically diversified debt exposure between local and hard currencies. Second, actively leverage blended finance structures and partner with DFIs. Third, prioritize risk-adjusted metrics like the Sharpe ratio over raw returns. Fourth, pursue thoughtful regional diversification. Korean equities currently offer compelling value due to material valuation discounts.
This represents a fundamental shift. As our chairman Bart Turtleboom states, diversification in 2025 involves engineering resilience. Emerging markets are no longer peripheral hedges, but core strategies.
That encapsulates the modern approach perfectly. Risk, when properly structured, becomes a catalyst for returns rather than a barrier. That concludes today's topic on emerging markets investing.
Here's a question for reflection. As investors become more adept at structuring risk and generating returns in these markets, what responsibility do they have to ensure economic growth is not only sustainable, but equitably shared by local populations? This has been Delphos Insights. Learn more at delphos.co.